Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies SOFI stock, and we have a lot of news to go over today. It's going to be both positive and negative news regarding SoFi Technologies. First, we're going to start off talking about how SoFi Technologies is being bought up by major institutions right now, so it's really good to see very established institutions such as BlackRock and Morgan Stanley buying up SoFi Technology stock. Then we're going to move on to more of a bearish negative article about how one financial reporter thinks that the SoFi stock is going to trade between $6 and $8 for the rest of 2022. Then we're going to talk about a very positive bullish article about SoFi Technologies compared to other financial institutions such as Bank of America, Charles Schwab, Morgan Stanley, and the rest, to see how they really stack up against the really big companies in the finance and lending space. Then lastly, we have a bittersweet article about how multiple investors are now agreeing about how the SoFi stock can literally 20x. This means that if you invest $1,000 into SoFi Technologies right now, in the next 5 to 10 years, that could be worth $20,000. But I will give my thoughts on this, but spoiler alert, I think this is slightly misleading and too bullish and too positive for my personal take on the company. But with that being said, I am still a huge fan of SoFi Technologies, and I do personally own it in my personal portfolios. So with that being said, remember to go and smash and destroy that like button right now for more SoFi stock videos. Remember to comment your thoughts down below about the SoFi stock or any of these news stories. Subscribe if you are new, it helps me out a ton, and without further ado, let's jump right into today's stories. So Deca Bank recently bought a new stake in SoFi Technologies, and we know this based off of their 13F filing with the Securities and Exchange Commission. They bought around 19,892 shares of the SoFi stock, which was currently worth around $293,000. Now you might be saying to yourself, well, this is not that much, it's only 19,892 shares, and it's not like it's worth millions of dollars, and I would say that you are right. But if we look at other companies and other institutional investors such as BlackRock, which also increased their SoFi stock allocation in the third quarter, and they now own around 13 million shares, which is worth somewhere around $216 million after they purchased their shares. We also have other institutions such as Geo Capital Management LLC, which also increased their position in SoFi Technologies in the third quarter, where now they own around 5.3 million SoFi shares, which is worth $85 million, which is absolutely spectacular. We have other bigwigs such as Morgan Stanley also doubling down on their SoFi stock investment, because now they own almost 3 million shares in total, worth around $46 million. Lastly, I want to point out Credit Suisse AG has also increased their exposure to SoFi Technologies, and they now own around 1.738 million shares, worth close to around $27.6 million. So this is overall extremely bullish news, and it's clear that institutions are trying to buy the SoFi stock because it's trading at a fantastic discount, which this author actually thinks that it's going to maintain its price between $6 to $8 for the rest of 2022, which is actually very plausible. Now, I do want to touch on, as the current macroeconomic and the economy worsens with threats of a recession, SoFi faces fierce competition from other established banks, which we will talk about later in this video when we compare SoFi Technologies directly to Charles Schwab. SoFi, however, is also rapidly growing, which means they are going to have to hire new staff to support their ever-increasing customer base, which is very good news. It's very good news to see that SoFi Technologies is consistently growing their membership base. However, what does this have to do with the SoFi stock price? Well, the author of this article says that according to SoFi Technologies' projected adjusted EBITDA, or earnings before interest, tax, depreciation, and amortization, of no more than $100 million for 2022, a valuation around $7 to $8 is too high, and that the SoFi stock price should be trading around $6 throughout the rest of the year. And this is very possible. I've said in my past videos that for 2022, the company is going to be extremely volatile in their SoFi stock price, which is why this financial reporter actually predicts that the company will drop and maintain themselves around $6 per share, or a market cap of around $4.5 billion. And for me personally, if the company does drop this low, then I would just buy more of it. However, this bearish article will disagree with other analysts and other financial reporters, because other analysts actually think that the SoFi stock price has already bottomed out at around $7, and from then on, it could trade between $7 and $10 per share throughout the year of 2022, with some potential of the stock surging all the way up to $17 to $22. Right now, the SoFi stock price trades at around $7 per share. However, the average analyst price target for the company is around $15. So yes, we could literally double our money in a very short amount of time by investing into the SoFi stock price. We have to remember that SoFi Technologies is still growing. They are clearly still in their growth phase, and they are transforming the fintech space, also known as financial technology, which offers fantastic opportunity because their market is worth trillions of dollars. They are also exposed and have exposed themselves to cryptocurrencies, which is fantastic news in my opinion, because this is literally drawing investors to their brokerage and cryptocurrency platform. But we definitely need to be aware of the current macroeconomic environment, which will show us how SoFi stock is going to perform during these times of uncertainty. In a past video, we talked about how the CEO of SoFi has bought over $750,000, coming in at $750,000 worth of SoFi stock just in the month of March. And the reason for this is that SoFi Technologies is successfully transforming the fintech industry as well as the overall finance space through their one-stop shop app. If you didn't know, SoFi Technologies operates an all-in-one inclusive app that offers anything someone would need in terms of financial products and or financial services. This puts SoFi Technology in direct competition with banks and even other brokerages like Charles Schwab. So let's see how SoFi Technologies compares to major institutions such as Charles Schwab, according to this Motley Fool article. If you look at both of these companies, they can be similar, which is why we are drawing this parallel comparison. They both operate brokerages, and Charles Schwab, ticker symbol SCHW, is a stock that I also personally own. It's been around for much longer, it's extremely stable, and they have expanded into areas such as banking and lending. SoFi Technologies, which is a fintech company, is much younger and it's still in its growth phase. So how would SoFi Technologies compare to a major institution such as Charles Schwab? Well, Charles Schwab, if you didn't know, was founded back in 1975 as a discount brokerage. They literally introduced and trailblazed the idea of adding online trading for stocks and assets in 1996, and from then on they infiltrated the banking space as well as the mortgage loaning space, and they even offer checking accounts. Right now, it has around $7.7 trillion in assets thanks to its fantastic and ongoing asset growth. SoFi, on the other hand, which is actually short for social finance, SoFi, originally launched back in 2011 as a lender to college students and recent graduates to help them refinance their student loans and to get their debt management under control. They added cryptocurrency investing back in 2019, and they also offer checking and savings services, which are literally the most competitive checking and savings accounts on the market, because in last video, we know that their checking and savings accounts offers people a 1.25% APY interest on the money that they hold in their checking accounts. So the money that is in their checking accounts will literally accrue and increase by 1.25% year over year, which is a reward that SoFi Technologies gives their customers by just holding money in their checking or savings account, which is literally 40 times more competitive than other traditional banks or institutions, including Charles Schwab. Now, with that being said, SoFi Technologies is very small compared to Charles Schwab. Currently, the market cap sits at around $6.6 billion right now. So when we compare these companies, clearly Charles Schwab is the much safer investment in total. However, it offers substantially less growth than SoFi Technologies. SoFi Technologies is growing faster, and it also has better future stock price appreciation ahead of it if it actually works out in the end. But with that being said, they do have negative free cash flows, and they are not a profitable company right now. They are anticipated to become profitable in the year of 2024, which we also talked about in a previous video. So there is a trade-off here. You can either have safety and stable growth, or you can take a risk, go out on a limb and invest into SoFi Technologies, which could work out in the long term. However, not every investor will come to the same conclusion. For some investors who want stable, steady growth from a fantastic company, then Charles Schwab should be the investment that you look more into. Remember, this is not financial advice. Always make sure to do your own research on these companies. While on the other hand, SoFi Technologies has much more risk associated with it, but the upside is absolutely phenomenal. And I've talked about this in multiple other videos. The current stock price and macroeconomic environment has pushed the SoFi stock price so low that I think it's very hard to ignore the value that SoFi Technologies is offering, because the stock price could literally surge in the next 1, 5, or even 10 years, which we will talk about next in the video of how potentially it could literally 20x. Again, a $1,000 investment now could turn into around $20,000, which is almost unheard of for the majority of growth stocks on the the market right now. We also really want to see how SoFi Technologies reacts in the current rising interest rate environment. SoFi Technologies hasn't really been tested in terms of a recession, and we really want to see how stable the company is overall. Now, I personally think SoFi Technologies is going to do fine, and I think that the company is extremely adaptive. But the real test will come in once interest rates continue to rise to get inflation under control. On the other hand, Charles Schwab, which currently trades at around $76, has a fantastic future stock price appreciation, and even during the speculative investing environment, Charles Schwab has performed extremely well, literally the inverse of what we are seeing with SoFi Technologies. So pairing both of these companies together and owning both of them is actually a really good idea because they will offset each other's losses while both continuously growing over the long term. And that's what I personally am doing because I do own both of these companies. SoFi Technologies is falling in price due to a plethora of macroeconomic factors, geopolitical factors, rising interest rates, higher bond yields, investors liquidating growth stocks and investing into value stocks, or investors totally liquidating stocks and transferring them over to bonds. We have the student loan moratorium and the student loan forbearance being extended, and this impacts SoFi negatively because this is where a large majority of SoFi's revenue actually comes from, is from their loaning business and the refinancing business for student loans. However, Charles Schwab does not face either of these problems because it's not in the student loan business, and particularly for their mortgage business, which SoFi Technologies is integrating into, they actually punt their mortgage lending customers over to Rocket Mortgage. So Charles Schwab literally gets paid either way. It doesn't really matter when we compare these two companies. Charles Schwab is clearly the much safer investment. And Charles Schwab is also extremely profitable. It's a very established company, and it's growing at a fantastic rate for a company that's been around for so long. Professionals actually forecast that Charles Schwab is going to grow at around 11% this year and 15% the years after. They have steady profit growth that is actually going to outpace their revenue growth from now until 2026. And as you can see from the stock chart, this company is going to be a fantastic buying opportunity right now because we are supposed to see fantastic upward trajectory for their revenue and earnings, which is going to reflect very positively on the SCHW stock price. Now, with that being said, let's talk more about SoFi Technologies because, as you all know, I am a huge believer in SoFi Technologies. I think that right now SoFi Technologies is undervalued right now, and I think a long-term hold, if you're willing to take on and if your portfolio can handle a little extra risk, you could be very well rewarded in the future by investing into the SoFi stock price. And I'm not alone in this. Other financial reporters and analysts literally think that the company could 20x. Now, I personally don't believe that the company will 20x. I think this is too bullish. However, even if the company 5x's, 10x's, or 20x's, all of this is fantastic news for the SoFi stock price. Financial authors literally say the opportunity in the SoFi stock price cannot be missed and should not be missed because over the next few years, the SoFi stock price can soar, and I quote, more than 20 times from current levels, end quote. Now, although this is possible, I think this gives investors the wrong idea for the SoFi stock price. Yes, it can 20x, but I would rather anticipate a 5 or 10x and be pleasantly surprised of a 20x rather than anticipating a 20x and the company only 5x'd or even 3x'd my money. I would rather set my expectations lower and be pleasantly surprised than having my expectations absurdly high and then be extremely disappointed in my investment. The SoFi stock price, like we talked about in the last article, has been absolutely crushed over the last couple of months, and this is not just due to the student loan moratorium. This is due to a plethora of other factors, including a major short interest in the stock. Right now, the short interest is around 14%, which is extremely high, and the short interest has been very volatile, reaching as high as 23% at a few points. However, by 2030, I think SoFi stock is still a good long-term investment, so if you're not willing to hold the company for the long term, this is probably not the company for you. However, analysts are still extremely positive and bullish, and they believe that SoFi Technologies will be a millionaire maker, according to this article, and that is not hyperbole in their personal opinion, which means that they're not exaggerating. They literally believe that SoFi Technologies can make investors a millionaire. But I would love to hear your thoughts down below. Remember to go and smash that like button if you haven't already, subscribe if you are new, and I will see you in the next YT video.